following is a technical analysis on Nvidia Corporation, a company of the technology sector in semiconductors here off the daily interval, in what has been described as the king of the semiconductor space, with their monopolization on artificial intelligence trading at 50 times forward earnings, to an extent of demand for their AI products is really hard to measure, and uncertain if the demand is limitless, with just huge, remarkable data center revenue surging 171% over the year. Automotive gaming revenues growing 17%, 22% year on year. The board of approval had a $25 billion repurchasing program, adding a huge wave of excitement for the dynamic period here of the semiconductor leader. And I believe we've reached a decisive transitioning point on the charts through technical posture, where some of the mega cap tech stocks have begun to potentially shift towards a downward decline, especially during the September honing into October correction prone period. There won't be another earnings report until early November, possibly leading traders to cover profits and or hedge their Nvidia long positions. And here we are, based upon the daily interval, where we have put in one of the more well-defined, a bearish dark cloud cover here off the daily interval. That is a pretty aesthetically well-transitioned bearish continuation pattern, in my opinion, only increasing the odds as they tend to act as weights of resistance upon the near-term key inflection points, where we have put in a huge volume at price profile around this region, with negative and bearish divergences that have only continued to construct in a very jagged-like state. And that is a pretty critical potential turning point. Where they are confirmed, we have the zero line threshold being defended as of now in the oscillator. We have the green candle closes above that oscillator histogram, printing right up above that key inflection point. And I believe these are new additional key levels to watch, with this primary reactionary uptrend line off the late January reactionary lows. And this, to me, signifies a very pivotal turning point of all key inflection points to watch, very concealed if and when we traders and or algorithms machines go and identify it. Based upon the 438 price support here, it really is the bottom of the gap there, towards the bottom of the gap, where you have the 50 exponential moving average just hovering and hugging that key triple line of inflection points right above. Whereas you have the additionally the 50-day moving average, just a very monumental key inflection point, in my opinion. Call it a minor support level right off that key inflection point as well. And again, just a triple line of inflection points to really hone in on and watch and respect really at all costs. Whereas bull traders, long traders down to that primary inflection point, which is another 6.3%. Still a long way to go from there. But additionally, just your additional dollar cost average, longer term investing and or near term trading pivot points to watch of support. Whereas long traders, bull traders want to step in really aggressively around that key inflection point to prolong the uptrend and the price action of a healthy pullback and or bounce in a much larger, prolonged, longer term move to the upside. That would be the key pivot point in re-challenging these negative and bearish divergences that have constructed amongst all three technical momentum indicators. And that would be a very telling pinpoint of reaction if and when we come across that key inflection point. Again, these are just your key levels. Whereas short sellers, bear traders, they want to see a solid daily candle close below that key inflection point, ushering in a very high probability red solid daily candle close sell signal on a potential backtest move, on an unanchored move right back down to the 404.73 price support, which would be good for a 6.2% crash, down to 372.18 price support for a 14% crash. Slicing through the 382 fibs retracement, call it 18.72% crash, and then a complete backfill the gap down to 306 price support for a 28% crash. And additionally, I have this minor reactionary uptrend line, call it minor price support off the October reactionary lows off 2022. And that would be an additional key turning point if and when we go on to retest that key level. A long way from that. And what I like within the space off that 404, call it almost 405 price support, is the 236 fibs retracement. That is a usual nice shorting op and or a juncture broken down, can usher in a much larger wave of selling, snapping off a ton of long traders that have been piling in, leveraging behind the eyeballs for a vast piling up rush towards the emergency exits. And again, as for the bullish case scenario, even having a retest amongst that concealed, hidden primary reactionary uptrend line could additionally put in a fake out move below the zero line threshold here of the oscillator, and then prolonged a nice whipsaw-like reaction right back above that key inflection point there in the technical momentum indicator dimension, to keep the health promoted within these within the technical posture of the stock and momentum of another healthy bounce. not objective to enter here on a short, whereas you'd want to wait for a breakdown, sell signal. And again, not objective for any longs until we go on to revisit that space off that key level. And additionally, if you're a long-term believer in the continuation of the monopolization of artificial intelligence within Nvidia and these blowout quarterly earnings, these are your key levels to dollar cost average down into, especially if you want a nice healthy pullback for a longer term uptrend. And then additionally, some other key levels to watch to dollar cost and bring the average price of what you purchased for the stock on a prolonged move to the upside.